Hey there, business owners and personal tax filers. Have you ever missed a tax deadline and wondered, what really happens if I don't pay the IRS in full? Well, it may start with a small penalty, then interest. You think you have more important things to pay? It's no big deal. Life happens, right? Days, weeks, months go by. Then before you know it, your mailbox is flooded with IRS notices, and they're not love letters. In this video, I'm breaking down the real cost of filing late, paying late, or not paying at all for businesses and individuals. We'll talk about penalties for S-Corps, C-Corps, partnerships, and what the IRS can do if you ignore them. Stick around because I'll also show you how to avoid these penalties, reduce what you owe, and stay in the good graces of the IRS. Let's get into it. Let's start with business taxes. These penalties apply to LLCs, corporations, partnerships, and even to sole proprietors. The number one penalty that we're going to go over today is the failure to file penalty. This is going to vary for the different filing types. Let's start with the flow-through entities, which are partnerships and S-Corps. Partnerships which file Form 1065 tax return and S-Corps which file Form 1120S are flow-through entities, so there is no tax payment due on the corporate tax level in most cases. In these cases, the only penalty will be a failure to file penalty. So what's the penalty? The penalty is calculated by multiplying an inflation-adjusted amount, which is $235 for returns required to be filed in 2024, by the number of persons who were partners or owners in the partnership or S-Corp throughout the tax year for each month not to exceed 12 months. When does it apply? If Form 1065 or 1120S isn't filed by the deadline, which is typically March 15th for calendar year partnerships and S-Corps, and no extension was requested, that's when this penalty applies. Now let's look at an example. Let's see this 4-member partnership that files its return 3 months late. The penalty is going to be for the partners times 235, and then that times the 3 months that they were late. That results in a $2,820 penalty. Another penalty that partnerships and S-Corps have to worry about are by not providing the K-1 to each partner on time. Failure to furnish schedules K-1 to partners is a $310 penalty per K-1 not timely provided. This is in 2024, with a maximum penalty of $3,783,000 per year for large partnerships. When does this apply? If the partnership doesn't issue Schedule K-1s to each partner by the due date of the Form 1065 or 1120S, including extensions. Keep in mind, late or incorrect K-1s can also result in penalties. Now let's talk about C-Corp tax returns, which file Form 1120. Now, these are subject to 2 different kinds of penalties, the failure to file penalty and also the failure to pay penalty. The failure to file penalty is 5% of the unpaid tax for each month the return is late, up to 25% total. When does this apply? If the C-Corp doesn't file by the due date, which is generally the 15th day of the 4th month after the end of the tax year. So for most people, that's April 15th of every calendar year. There is no penalty if the return shows no tax due, but if tax is owed, this penalty kicks in immediately. So let's look at an example. You filed Form 1120 for the tax year 2024, and you filed it it's supposed to be due April 15th, but you ended up filing it on May 5th, which is 20 days late. Say you owed $1,000 on the 1120. You did not file an extension. So you're going to owe the 5% per month of the failure to file penalty. And this applies because the return was filed after the due date. So you were 20 days late, which the IRS counts any part of a month as a whole month. So that's gonna be a full month of penalty. The penalty is 5% of the $1,000 tax that you owed, that's $50. You also have a failure to pay penalty, which is 0.5% per month, and it applies for 1 full month since payment wasn't made by April 15th. So the penalty of 0.5% times $1,000 is $5, but when both failure to file and failure to pay penalties apply in the same month, the IRS graciously reduces the failure to file penalty by the failure to pay penalty, and therefore it's gonna drop down to 4.5% instead of 5.5%. So that's gonna end up costing you $45 in penalties. Don't forget there's also interest on the unpaid tax. So the interest rate is about 8% annually, but it compounds daily and it changes quarterly. So for estimation, let's use 8% annual, which equals about 0.022% daily. If we calculate that interest over the 20 days, that results in a $4.40 penalty or interest rate. If you filed on time or filed an extension but didn't pay, the IRS is still going to penalize you for not paying on time. And that failure to pay penalty still stands at 0.5% of the unpaid tax per month, up to 25%. So always file, even if you can't pay. The failure to file penalty is definitely harsher. Now let's look at the penalties that individuals face. They're pretty similar. The failure to file penalty is 5% per month, up to 25% of the unpaid tax. Even if you're owed a refund, you should definitely file on time, because after 3 years, the IRS keeps that refund and you can no longer get it back. There's also the failure to pay penalty, which is the same 0.5% of unpaid tax per month, up to 25%. And interest is also charged, and it compounds daily. There is an estimated tax penalty, so if you're self-employed or have investment income, you may need to make estimated payments. Missing or underpaying these estimated payments can trigger penalties. So how do you avoid that? Avoid it by paying 100% of the tax that you owed last year, or 110% if your income is over $150,000, to avoid that underpayment penalty. Like the accuracy-related penalties for businesses, this applies also to individual returns that are incorrect or incomplete. Remember, that's 20% of the underpaid tax due to negligence or disregard of the rules. So how do you know you owe a penalty? Well, you know because you know if you filed late or paid late, that a penalty is definitely on the way. When the IRS charges you a penalty, they're not gonna call you, they're not gonna send you an email, although the state can. But the IRS will certainly not call anybody. They will send a notice or a letter, and it's gonna tell you about the penalty, the reason for the charge, and what you should do next. So on a side note, if you owe the state, like I said, they may call you, but for safety's sake, do not give out anyone calling you your banking or credit card information. Hang up and call the state directly and see what they tell you. There are too many scammers nowadays, and they are getting more and more believable. So back to the IRS letter. Verify the information in your notice or the letter is correct. If you can resolve the issue in your notice or the letter, a penalty may not even apply. Now, many people move and they forget to update their addresses with the IRS, and of course, they don't receive the letters. You must update your address with the IRS, because these penalties are just gonna keep increasing in the meantime, and you're not gonna get the letter, and you'll end up finding out when your bank account gets frozen or you get a lien on your property, which is never good. The good news is that many of these penalties can be reduced or even eliminated. There is something called a first-time penalty abatement. If you filed and paid on time for the past 3 years, you might qualify. It's never guaranteed, but it's worth a shot. It applies to failure to pay, failure to file, and failure to deposit penalties. There's also a reasonable cause relief, which the IRS may waive penalties for events like natural disasters, serious illness, or theft. You will need to submit a written explanation and supporting documentation in order to try to get that. There's also a payment plan. If you need to establish a payment plan, use Form 9465 to request an installment agreement. The IRS is still going to charge interest, but the penalties may stop increasing. Always, you can file on time. That's always a very good way to avoid these penalties. And remember, even if you can't pay, file your return and communicate with the IRS as soon as you get that letter after you file where it shows your balance due. So what happens if you don't pay the balance you owe for whatever reason? Well, the interest is going to keep accruing, and that interest is charged daily on the unpaid tax and the penalties. So that's going to grow exponentially fast. The current interest rate as of 2025, like I mentioned, is about 8% annually, but it's compounded daily. So even small balances can grow quickly over time. It's like a snowball effect. So remember, the failure to pay penalty is 0.5% per month, up to 25% of the unpaid amount. This continues until the balance is paid in full or the maximum is reached. IRS notices and demands for payment. You're gonna get a series of increasingly urgent letters. The first one is gonna be the CP14. That's the initial balance due. That's the one that when you receive it, you should call the number at the top right-hand corner to establish a payment plan. But if you ignore that one, you're gonna get the CP501 through 503, and these are reminder notices. And then the CP504, that's a notice to intent or levy. That's a serious warning. And the last step is federal tax lien. If you ignore this, the IRS can file a notice of federal tax lien making your debt public. And this is gonna hurt your business and personal credit, and can affect your ability to sell your property or get loans. The IRS can levy. They can legally take your bank accounts, your wages, your Social Security benefits, your accounts receivables, your business assets or vehicles. They can also seize and sell property to cover the debt. And a lot of people don't think about this one. If you're a foreigner, If your unpaid federal tax debt exceeds $62,000, the IRS can certify it to the State Department and your passport can be revoked or denied. That's terrible. So please try to avoid that at all costs. There is no discharge in bankruptcy usually. Most tax debts are not easily dischargeable in bankruptcy unless specific conditions are met. So how do we avoid this escalation? First of all, pay what you can. Even partial payments reduce penalties and interest. Request a payment plan. Use IRS online payment agreement or file form 9465 and stick to the plan. The minute you fail on your payment plan, they will start to collect the entire balance once again. You can request a penalty abatement if it's your first time or you have reasonable cause. There's also offer in compromise. You may be able to settle for less than you owe on form 656. So to wrap this up, IRS penalties can be expensive and super stressful, but most are avoidable. Please pay attention to the filing deadlines. They typically are the same every single year, so it's not really a surprise. And when in doubt, ask for help. A tax professional like us can save you far more than we cost. Thanks for joining me today. This was a little bit of a longer video than usual, I think, but I hope this helps you understand this topic a little better. I have a lot of people calling, asking me about penalties all the time. Please like and share this video with anyone you would feel would benefit from this information. And as always, please give us a call if you need additional help. Thank you and God bless.